Hey guys, welcome back to the Capital Mindset Show. I hope you guys had a great day today. And if you guys haven't checked out the video yet, go check out the YouTube index video. It's a very short video, but you don't have to. This video today is about Amazon. So Amazon is down 7.56%. I'll actually showcase that right here. And, after earnings that they reported recently, it's been on a downtrend. Now, we will talk about some other stocks a little bit here, but the focus is going to be on Amazon. I want to actually show you guys this video here that was posted on February 11th, 2022. And in this video, I'll summarize it for you guys. You guys don't have to watch it if you don't want to. But the summary is I thought Amazon was overvalued. And some of you might be saying, and I'm kind of hoping I'm reading your mind, but you hold Amazon in the portfolio. And we'll actually take a look over here. Amazon is right there. So let me explain that. And again, for, I guess, I don't know how many times I've explained it, but, and it's fair because we always have new people joining the Capital Mindset community. So Amazon is a company that has been in the portfolio for quite some time, and it's a trimmed down position. So for those of you who have seen it more recently and joined more recently, you guys remember ConocoPhillips, that ConocoPhillips used to be closer to 9-10% of the portfolio, and I trimmed it down. And it's when I like a company, I don't divorce it necessarily. Now, actually, I'm looking here, and I didn't see this. ConocoPhillips is now above $100 again, so I'm going to be trimming it down a little bit more probably in the coming days because that's kind of like my strategy right now. And so something like Amazon used to be a larger position in the portfolio, actually closer to the size of where Alphabet was in dollar amounts. And so but obviously I don't disclose with anyone my portfolio values. You guys can guess, I guess, at best, but it's for my privacy and for, when I go work elsewhere in the future, I don't want my future employers ever coming across this and finding out, oh, this person has, I hope you guys understand that. But regardless, the most important thing is allocation and timing. Okay, allocation and timing is important. So Amazon is down here today. It's not still down to the cost basis, but it used to be a larger position in the portfolio, and it's still. I just haven't divorced it because I love the business, and we'll actually get into that. And actually, it's a good time to mention I love the business, right? So I'm kind of biased, but as you can see here, I try to remain objective. And the old video here, when the stock price was about $3,065.87, I'm being vocal and verbal because I know some of you watch through your phone, and I try to be accommodative to you guys. So even though this is my side passion and hobby, I always like to do things good, right? I don't like to half-ass things. But back then, I thought it was overvalued. That's the summary of this video, even though, yes, it was a holding, but I'm not divorcing from it. I've already trimmed. I've already de-risked the portfolio in my mind. All right, so now let us go into some kind of context about what's going on. So e-commerce is down. Report came out that in-store sales grew 10%. E-commerce decreased by 1.8%. Now, I know what you're thinking. You're saying, well, it's in-store sales are growing from a smaller base. We know that the trend has been shifting more to online. So it was already a large number. It makes sense that it came down a little bit, and we're opening up again. You're absolutely right. So ignore that headline to its fullest extent. It's trying to make people think other things, I guess. But the trend is still strong that we are moving more and more and more towards e-commerce. Amazon's at the forefront. And we had a lot of reports. We had eBay come out. eBay is not doing too well. But when we talked about, for example, the last time we talked about Amazon and other e-commerce companies and other companies having to do with the consumer, we did address those risks. I don't know how else to set it, but like we said on the channel, I don't know the severity of a coming recession, but it is probable that we end up with a somewhat of something, at least the consumer slowdown to some extent in some spending categories, okay? Because if you take a look at the oil trade, well, that's done fantastic, right? We've already kind of exited that at this point, and the materials trade, because BHP is another one that I haven't divorced, but I've trimmed down quite drastically, and same with Rio Tinto. But in all, that has to come from somewhere. That extra earnings that came from the nether is coming from somewhere. And I have been stating that the consumer might be the one getting the hit in this instance. And eBay's down 11.72%. Now take a look at this one. This one has already been requested, and I'll do a video on it because heck, when do we see 25% declines? We had NCR. NCR declined by, something close to that. And we're doing really well in that position. It's a new position. And it's similar to how what happened to Foot Locker, where the model's like, you need to buy this. And I was like, all right, fine, we'll do it. So we bought a little bit of NCR. But taking a look at Wayfair here, it is down. And Wayfair is an online e-commerce for furniture, for those of you who don't know. And I have overstock in the portfolio. But remember, I don't own overstock for the core business. Remember that we were seeing declines in overstock already in the last earnings report. report regarding the online furniture business. I did not invest for the online furniture business. I did state, however, that I understand why someone might, but remember, and we've talked about this, for example, with Corsair, with SWBI, with these other e-commerce plays. The demand was pulled forward. And now, back when I made those Corsair videos, those are one of the earlier Corsair videos on the channel, or the Corsair, earlier videos in general in the channel. I got some pushback from a lot of people saying that, Corsair is a good company. And one of them was like, you guys just hate Corsair. Now, the numbers are in. And back then, the comments were, perhaps it's going to slow down this growth. This growth will most likely slow down. And so the price targets actually, or in the more recent video, I think now, not price targets, but buy price, are even lower and lower and lower. And because the fundamentals are actually deteriorating now. So the numbers are in. And taking a look at something like Amazon, which Amazon's not going to go anywhere, but they're showing bad guidance. And bad guidance is what actually drove this. If I look at Wayfair, when I do the Wayfair video, I guarantee you it's bad guidance. And then that kind of spells a little bit of concerns for everything else. But if you were paying attention to the risks associated with the consumer spending, this is not a surprise to you, okay? You don't have to know exactly the quantity of it, but to know that it is possible that it could happen, then it doesn't come out of left field. Does that make sense? I hope that makes sense. All right, so we already covered all that in kind of, I guess, extensive detail. Now, we'll also talk about this slide deck, and I'll be very brief with this. Basically, we talked about it and we said, okay, look at the cash flows declining. We expect cash flow to decline further. Here we go. We got the numbers. They're declining further, declining further, declining further. They're declining further, but we're not going to punish it because, of course, the firm is investing in its future. We can't punish it for that. AWS is the big dog in the room. Now, I have intimate love for AWS, and I'll just say that I won't exactly say where she works, but my wife works in the area. You guys can assume whatever you want, but AWS is a very familiar thing. That's all I'll say. And so also, I know a lot of individuals who I work with who actually work at AWS as well. So I'll say them because I'm keeping them anonymous, but they do work at AWS. And so I have a particular affection for AWS because I get exposure for it. But looking at, well, I also have an appreciation, let me be honest, for Google Cloud. Let me shout out my largest holding there. Also have appreciation for Microsoft Azure. And I actually have used Azure and Microsoft Power BI and the like. So taking a look at operating income, it is down. Okay, all is down, 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 down. Oh, and also the thing is, I was reading through their earnings report, basically what you can kind of derive from that. And basically, I don't know if I'll go into the rest of this, guys, but I want to talk about their earnings report. Their earnings report, they basically said, we overinvested. Oh, there's a lot of expenses that are coming up regarding transport and gas, the gas is up. Who would have thought? Who would have thought gas is up and that hurts Amazon? It hurt Amazon. And So all that's going on. Again, they overinvested. Now demand's kind of squandering. They I guess didn't see that, perhaps the consumer was pulling forward a lot of demand, and now people are going to maybe shop not as much, like the growth isn't going to continue to grow as it was before, and that's what they were kind of estimating for with all that investment and that continuous investment. So now they've overbuilt, and that does imply that in the future they might not build as much, right? So that CapEx, that growth CapEx might come down, okay? But, that's a good and a bad thing. I'll just say that's a good and a bad thing. So with that being said, I won't waste your time, and let's actually go into the model. I've already plugged it in just for us to look at. And since I already plugged it in here, we can kind of see what we're kind of at measuring here. Required rate of return is about 10%. No margin of safety there. Buybacks dilution about 1%. And those are the growth rates I kind of estimate. High end of 25%, low end of 10%. Remember that that's on earnings and cash flow, not necessarily the revenue. Revenue is probably going to grow slightly less than that, but they can improve some efficiencies, and we're kind of giving them that room for that. Now, the concentration of estimation is between 10 and 18%. And based upon that level of concentration and the probabilities, we are seeing that the recommendation portfolio weighting is about 0.54%. Now that is above my current weighting. Again, I use this as kind of like a measuring stick. I don't really follow it religiously. If you consider it probably out of my total net worth, maybe it's It's kind of close to that, but who knows? I don't really measure. I haven't calculated that yet, but whatever. Revenue is, yeah, around, so that's estimates by analysts, not me. Cash flow estimates, that's analysts, not me. So they're expecting a massive jump up in cash flows. I doubt that. That's probably a glitch in the matrix. Because you can see what that is. So that's a glitch in the matrix. So us as humans, we have to, you know, say like, something's reading wrong there. Most of the time, it's not going to be like that's pretty finicky. I mean, maybe. I don't know. What kind of cash flows are they expecting? Like a drop completely in CapEx and stuff? I don't know. Share dilution is slightly, but it's still there. All right, so let's actually take a look at the ratios and take a look at that ROIC. How's it been doing? It's been fairly stable. ROE is a little bit better of a measure for something like Amazon, and ROA is going to be low because of the retail business. Taking a look through this, my eyes don't really see anything that stands out of the ordinary. That's crazy. I mean, some of these things are getting worse. Not worse, actually, but because if you look at the interest coverage ratio, it's perfectly fine. They're doing really well. Taking a look at the earnings quality is pretty good. Okay, so all that's really good. So basically, let's start actually increasing that margin of safety there, and we can start to see that or get an appreciation. Ignore that percentage, by the way, but because now the calculator's like, oh, stay away from this, stay away from this. Basically, in summary, I'm not really adding to my Amazon position at these prices. I don't think that it's yeah, I don't think that it's a good moment for me, but maybe for someone else, right? It depends on the person and their estimations, but you know, I'm just kind of sticking with what I got, and so I kind of stick by my statements here in this video. I think I was correct in these statements. I think I was. It was a right move not to think it was a buy or add to the position, and I basically am not changing that position. That's basically the update to this whole thing. All right, guys, on that note, thank you guys so much for watching. If you guys found value in this video, go ahead and feel free to leave a like. I try to make it a shorter video and try to get through it, you know, just none of the BS, none of the rambling, just boom, 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 boom. If you guys enjoyed that, let me know. And yeah, and just a little bit of an update. I want to ask you guys, if you guys made it to the end of this video, do you guys want me to do a reaction video to Robert Reynolds' reaction video to my video? I guess make it an Inception moment. I did reach out to him. I did email him. Of course, he's a much larger YouTube channel, so I don't actually blame him if he doesn't ever respond. I am basically a minnow at this point, and this is again my side hobby. Again, I have a job, and which I have a lot of fun doing, you know. I actually was actually tasked with analyzing Disney, so I'm basically doing a lot of analysis on Disney at the present moment, and finding some interesting things in there. But you know, because Disney prices come down, and so my employer is actually really interested in the prospects of perhaps Disney. I won't tell you if we buy or not. I can't tell you, but I will tell you if I buy or not. And if I buy or not, you can kind of assume whatever you want. But regardless, on that note, guys, let me know if you guys want to do that reaction video or whatever. I do have to abide by the voting, and there is a reaction video to someone else's portfolio that's coming out soon. All right. On that note, guys, thank you guys so much for watching. I'll see you guys in the next one. Bye.